Hello everyone and welcome to Philly Crypto Trading Plus. Are you confused by all this price volatility? Are you wondering what prices will be next? Well, look no further. You're definitely in the right place. I'm here to solve these problems for you today by providing clear, concise, and competent technical analysis. In today's tutorial, we're going to be analyzing Litecoin. Specifically, we're going to talk about the triangle that is broken out that we talked about and that we certainly called. We're going to talk about the 20 and the 50-day moving averages and how they're playing a role here in support. And we're going to discuss the trading rules again because there are some people that have commented and talked, and I think some of the newer folks coming on, even though if you go back and watch my older videos, you'll hear it periodically. I'm going to bring it up again just for you guys because I don't want the new people coming onto the channel not understanding what's going on and getting upset and maybe blaming others for something when they weren't aware, when really you could either go back and listen to all the videos. But you know, when you come on a channel and you find somebody that you like in their content and you think they know what they're doing, whatever, always do yourself a favor, go and listen to the other content that they have and familiarize yourself with what it is that they're doing. Okay, so that way you're never surprised by the market. You see what's going on because nobody likes surprises, because usually a surprise in the market costs you money. So very, very important, but I'm going to cover that one more time for you real quick. Okay, also we're going to talk about the parallel channel. We're going to talk about the Fibonacci extension for a bit, the MACD, RSI, and the money flow index. And we're also going to talk about the breakout that we've revisited, the symmetrical triangle that we talked about. So these are some of the things we'll cover today. Now, please be sure to stick around to the end because I'm definitely going to be giving you my next targets and tell you where I think we're going to go next. Now, before we get into the video, please be sure to smash that like button because it lets YouTube know that you're enjoying the content. It makes a huge difference to me. Speaking of that, I want to thank you all. I believe with this next set of 2 videos here, I usually release videos in a set of 2. We're going to put this one out today. I do believe that this one will probably be the one, guys, that gets us over the top for our 4,000 watch time hours, which will, be monetization for me. But I want you to understand that 4,000 watch time hours is solely you, my audience. You guys are responsible for that. So I want you all to take a bow and thank yourselves. And I certainly want to thank you from the bottom of my heart. I really didn't know what to expect when we started this, but I started realizing how much the people need the help. And this is part of the reason I do these things. I've got a lot of things to do, guys. I own and manage properties for over 35 years. I do the stocks trading. I've probably been in about 12 to 15 trades all week. I've got a lot of responsibilities that I do, dealing with tenants and what, and I've got a roof that a guy's going to be putting on tomorrow, the next day. And so I do a lot of things, guys, but hey, I take the time because I realize how important it is to you guys, and I didn't mean to go on about that, but I just want to thank you guys. I find the time in my schedule to do this for you guys because I really appreciate it and I value you guys, your input, and your support. So I want to thank you very much for that. Now, also, I'm always trying to improve my videos, guys, and give you the best content that I can. So please let me know what you like about my content in the comments below, and I'll certainly be sure to do more of it. Because again, guys, this is for you. Okay. Now, let's get into today's lessons. Okay, first of all, what I want to talk about here is the 20-day moving average here in orange and the 50. Okay, the 20. 198.14 and the 50, 197.53. Now, I want you to take notice here. This is when we started talking about the triangle and all this good stuff and see what's happening here. And then see we came up, we started flattening. This was really a consolidation period, guys, which to go higher, right? So you can see how we flattened out here. You see how it took a bit of time for our 50 to catch up. It caught up, and then we actually crossed there, and look what happened, right? So we've got a flattening going on, and we can see the 20s getting ready to bust up there again. So also notice that the 100 has caught up now as well to where it's actually touching the bottom of where we talked about. I believe our Fibonacci retracements, we're not going to cover that today too much, but just I believe it was in the 172, 173 area was a very important Fib retracement. So that held it very well, and we already talked about it in another video. So most importantly, the moving averages, how they're catching up, how they're consolidating here, and now we're crossing and probably getting ready to move up again. So I just want to cover that real quickly for you with this 4-hour time frame here, guys. A little closer look for you. Okay, you can see here. Look at this. We had, we obviously moved up and popped out, right? We certainly had our move from a symmetrical triangle that we talked about that was going to happen. Okay, again for traders. This is the spot that was the trade. Okay. Again, you see this falling wedge. When we break that parameter, boom, that's our time to jump in. But anyway, so now we moved up. We busted out of our channel, or I should say, excuse me, in my symmetric triangle. We busted up. We've got our target of around 300, 310. Yes. But remember, guys, I've always told you before, some people, new guys, don't understand, or they don't watch the older videos, or they know this. A lot of times when we bust out of these triangles, a lot of times we'll come back and revisit. Okay, so if you notice, we pretty much went about halfway to our upper longer term, not we're going to do it all in a day kind of thing. I say that because of some of the comments. We go up, we come back down, we retest the triangle. Well, guess what? That's a good thing. That's a healthy thing. That's what we want. I always tell you guys, like building a house. If you build a house on a crappy foundation, it's going to fall down. If you build a good, strong foundation, it's going to stand for a long time. This is what we have here. So we want to see a couple steps up and then a step back. We want to see these kind of things, guys. This is natural. This is healthy. This is normal. This is what we want to see. So some people are alarmed by it coming back. Guys, you don't know the market like I do. That's why you're here. I'm trying to help you understand this. Okay, so I want you to notice where these levels are, where it's stopping. You'll see how it's spiking here. These spikes are important. We'll talk about that in a second. But just here, I want you to notice here, guys, how this 20-day, this is on a 4-hour time frame, by the way. See here how we're stopping right here where this is catching up to. It's not an accident that that's converging like that, right? So anyway, now getting into our Fibonacci extension, guys, I want you to take notice of something. Okay, we went down, like I said before, we called this, we got out, we got a nice flattening, we busted out of this symmetrical triangle. A little better look. As you can see, we didn't quite get up there, obviously, but that's okay. What we most importantly want to notice is when we did the last video, I believe we were around 215, maybe 220, thereabouts, and we hadn't busted yet, right? But we knew we were about to. So then we, or we had just something like that. But anyway, about 215 to 20. So I'm only pointing it out to take notice of the 0.5 Fibonacci extension at 220.29. So we moved up. That was a test of resistance to get through that. We went ahead and got through that and busted up to the 244 area, which was nice. But what I want you to notice is when we came back, guys, look at the spikes. The spikes are touching that triangle. They did not want to come back into the triangle. Very important, guys. So when you see these spikes like this, both on the up and the downside, guys, these spikes right here, what that's here, let me make this a little larger for you so you can see a little better. That's telling you that they're resisting the selling. They're buying it up. Okay, so that's telling, it's getting good. So most importantly, we spent a good bit of time today, holding on to this 220.29. So that tells us that while it was resistance that we had to bust through there, now we've come back down and we're sitting right there, really for a lot of the day, guys. And so that tells us that we're trying to consolidate here and form some kind of a support. Well, why would we do that? With which to go higher, guys. That's what we're talking about, right? So anyway, I've got the MACD here for you. You see how we busted out again. We talked about this. Okay, we're running up, getting stronger. Our RSI now is at 68 and some change. Notice with the pullback here, how we flattened out nicely here. That's a great thing. Coinciding with this right here. And the same thing with the money flow, just a bit back, but look at this, still strong money flow, flattened, nice. So these are not getting any weaker. We're still seeing the money coming in, and we're also seeing the relative strength hold up as well as this. So all these four things say the same thing. We're looking at support for 220 with which to go higher, and still our upper targets are going to be that 300, 310 area to be able to meet the requirements of this triangle when it's fully realized, because that doesn't mean it's going to happen tomorrow. It doesn't mean it's going to happen in 12 minutes. What it means is we're going to be working in that direction and end up, we're heading there. We don't know exactly when we'll get there. I'll tell you all the time, guys. I can tell you what's going to happen. I can't tell you how or when it's going to occur exactly. Our job is to read the charts. And I tell you all the time, each day is a chapter to the story. This is why we watch, because it's an ever-changing, let me repeat, an ever-changing story. We got some people with comments going, oh, the pull, guys, it changes every day. Our job is to stay on top of it, right? So here you can see the averages here, right? the 50 is flattening nicely, and there's the 20 getting ready to go up through it again. So we should be able to see some kind of a movement up and get going again and get even stronger. That's really what we're looking to do. And of course, this is just a shorter time frame, guys. Same thing here. You can see the 20 here, right there, coinciding with all the support going on. So money flows backing off a little. This is, again, the 4-hour time frame, guys, but not that big of a deal. I'm sure we'll be getting some flattening. You can see the relative strength is already flattened, and the MACD is probably getting close to flattening right here. So we're looking for this in the next 2 or 3 days, what we want to formulate on. Also, I wanted to point out one more thing for you. How I've talked before about this parallel channel, guys, the ascending parallel channel. Well, we fell through it, and I told you before that usually means we'll get back up into it. So as you can see now, guys, here's the line. I didn't really extend it out for you, but you can clearly see now we've gone back up into the parallel channel. So therefore, we're going to see if we can't continue and meet this 250 something area, which would be the middle of that channel, right? Just to give you an idea, okay? And back to our targets. We talked about the 310, which is really right here, guys. That's probably the upper target, but obviously we want to get to the 220. We've already touched over the 236, so that's really our next target to get up through. And then the 258 will be next. And of course, guys, churning. We like churning. We don't want it to shoot up 300 points, and because it may come back down. That's not what we're looking to do, guys. We're looking to plod and get ahead and get stronger. I say this because there are people that come on. Some people are young and impatient. They want it all now. That's not how it works. You have to be patient and sit back and watch at what the market tells you to do, what the market is willing to give you, not what you want to take from it. This is a very important psychological lesson for you guys, because the majority of people lose money trading, and the reason for that is because, in my opinion, this is just my opinion, they're selfish in nature, meaning that they are looking to see what they can take from it. That's not how it works, guys. It's your job to pay attention, observe like I'm doing right now, and see what opportunities the information presents to you. Big difference, guys. I know some of the folks are younger, but I'm here to teach you, try to help you, try to get you to make consistent money. Very important things, guys. Discipline, determination, all these good things. Now, trading rules, again, guys, we drew this on here. I think it took off. That's okay. We'll just we'll put it back on there again. Yeah, I think it did. Yeah, it sure did. Okay, well, that's all right. We'll put it back up. Okay, if you're trading, right, here we are at the top. Well, this is about, let's say right there, that's about 3.3%, just to give you an idea. So if you're trading, I've always said this, guys, as the price moves up, you're moving your stops up. You're always putting a stop in. You don't ever enter an order without putting a stop in. And as the price moves up, you're going to move your stop with it, always 3 to 7%, depending on your tolerance level, depending on your risk level. There's many different factors. You might have a lot of coins. You might have a lot of money to work with. You might have a little bit. You have to find out where in that area you're comfortable with, based on you and your style. Everybody's different, right? So if you're following these rules, just for example, 3.3%, guess what? You're out at 237, 238. Myself, I got out at 241, and I bought it back again at 201, and then I sold it at 225, I think, and then I'm actually in it again right now. I think at like 215, 214. So I'm actually in 4 trades right now when we're talking, guys, just so you understand. So anyway, I hope we've covered everything for you. I wanted you to notice also real quickly how this is holding the 20. Yeah, we did kind of point it out. So that's pretty much what I wanted to cover today, guys. So this is the part where I'm going to turn it over to you guys. Please tell me, what's the most important or valuable thing that you've learned today from today's lesson? Please let me know in the comments below. Because remember, guys, this is for you, and I want to thank you again for the monetization that's getting ready to come in the 4,000 hours. Without you guys, I couldn't do it. So thank you again. And please make sure to subscribe, like, and share, because, guys, there's a lot of people out there, especially in this economy, that could use help like this. So please get out there, share it to folks. Let them know that there's other alternatives and opportunities for them. We've had some comments. People say, I hate my job sucks. Well, guess what? This is another opportunity. This is another option for you guys. Because I got where I'm at because I worked hard for myself, guys. And then I learned how to make my money work hard for me. And that way I had myself working hard for me and I had my money working hard for me. Pretty soon, I didn't have to work so hard anymore. And that's the idea, guys. I'm here to share this wisdom with you. I live it and I do it. So, guys, share this information with the people because you know there's a lot of folks out there that need it. I can't thank you enough. Also, again, the reason I need you to do this is because I can continue making better and more content for you. So if you want to learn more, make sure that you watch this next video.